All right, so in order to prep for this week, which will be the June 15th, in the market, June 15th through June 19th, we're going to go ahead and do some review of various charts, review the price action that we've seen overall, and be prepared for what may lie ahead. So first thing to start with is going to be the news. So the news for this week is pretty serious. We have FOMC rate announcement at 2 p.m. on Wednesday. So FOMC is a 2-day event. Wednesday, 2 p.m. is the event. So it's going to be a big deal because it's Warsh's first time. Yes, thank you, Swepta. That was next. We do have contract rollover as well. So futures traders, your contracts are rolling over. Oh my God, this ugly indicator here. Futures contracts are rolling over, so we do have to deal with that. Most of your brokerages will auto roll you probably on Tuesday, but just keep an eye out for that. If you are looking at maybe a Ninja Trader or Thinkorswim and TradingView or whatever, and the contracts don't match, just keep in mind contract rollover is a thing. Okay. Otherwise, for news, as far as red folders go, we do have 8:30 news on Thursday. It's not a red folder anymore. It's orange, unemployment claims and Philly manufacturing index. And then that's pretty much it. Really, the red folders for the US are just FOMC. And then we have contract rollover. Now, if we get into just quickly looking at the fear and greed index, we are in a fearful market. We're at a 34 on a scale of 1 to 100. The market has moved up from a 29. But we did seem to bottom out at the 27 fear on June 10th, which was right here on Wednesday. I think that lines up well with the fact that we broke this low and then have now retraced and are pushing back into this high. So we'll look at SPY and QQQ and then understand that while the numbers are different, the levels are essentially the same. All right. So I'm going to stay on probably the 30-minute time frame as it allows us to see a bigger chunk of the chart without being disrupted by all these micro 10-minute candles. So while looking at the 30-minute chart, here's a couple things to note. Off the old all-time highs, we had 2 gap downs, okay? 2 gap downs that are not filled. One gap down here with a little retracement, another, and then it pushed back up, still failed, pushed out of it, and then a very large gap down with a very minor retracement, right? So if we get to it, over 752 is a key area that I would watch because we are now over that candle's high and encroaching on this unfilled gap, which is consistent of all of these traders who were just buying, and any of them are still in, are underwater on their positions, and they may add to selling pressures. Yes, VIX monthly. Yeah, I have that. Thank you. I have the VIX marked on my VIX charts, so I hadn't gotten there yet, but thank you. Yes, shine big. Shout out to you, buddy. He's my quant, a extreme wealth of knowledge. So VIX monthly on Wednesday and OPEX on Thursday. The Japan rate decision on the 16th. Okay, because the carry trade. Yes. Yeah. Good call in Japan. I did not have that on my radar. Okay. So let me go back to that. The Japan thing. The 16th. That's tentative. It doesn't look like it has an actual time of release yet, so that could be sometime in the overnight session, which could be rough. Could be rough for us. Could be rough in the overnight session. Could wake up to a big gap up or gap down, but we'll just mark that out and play it. Okay. We did fill another old gap that existed from way over here, and then there's a May 4th to May 5th gap that's sitting unfilled below us, which we tapped into. After this big move down, we tapped into it, and then we just continued we gapped up and pushed out of it. All right. So on this 30-minute chart, what do we have? It's same thing, 10-minute or whatever. We made this move down. We barely broke below, right? We popped back up, so we broke this high. We knew this was a weak high. Why do we know this was a weak high? Because it pushed down, it made a new low. However, then it was broken. So now this weak high is broken, comes back down. We make another new high, and now we're pushing into this level. So if this area is a strong high, which broke a new low, we should see sellers defending, and they are. As you can see, they are trying to defend. And what happens here will be a deciding point for, are we going to break up and then these sellers want to get out, or are these sellers going to re-engage and push us back down? So we'll have to play that price action as it comes. However, looking at this and looking at what the market has done, the market still is holding bullish price action. Let me take these off. Oh boy. Moving average. Is this the 20? Yeah, we did close back over the 20. So I also want to call out, where is my indicator? Put another one on. The 50. Okay. So we held the daily 50 EMA, right? Overall, this price action, while we made some fast moves down, elevator up, or stair steps up, elevator down, we made a significant change on this turnaround. If we also look at the weekly candle, this is how the weekly candle ended up playing out. The one thing I'd also like to point out, and I'll throw one more EMA on there. The 9. Okay, so we have the 9, the 20. Now the 9 and 20 weekly had crossed, right, and it pushed back over, and then they flipped back. So we have this big move. We have this big move up. One of the most common things that we see in intraday price action is that when we make a big, impulsive, and strong move away from an area of consolidation, oh, my favorites right here, perfect. Away from an area of consolidation, which we could easily define as this. This was an area of consolidation. If we want to look at like a bigger time frame or like weekly, maybe we go to something like this, because let's put it on the weekly. I'm sorry, that is the weekly. So monthly, I wouldn't call it monthly consolidation. All right, so this is the weekly. But anyways, we had been consolidating in this range, right? Like consolidating, barely peak out, starts to come back down. Finally, it comes back through here. It wicks through the other side, catches support, reverses, weekly 50 EMA tap. First one in basically the better part of a year, right? And it has pushed up. Now that we've pushed away from that area of consolidation with strength, the first flip, right? So the first aim flip into the EMAs is usually a fake out. It is usually the best place to buy the long. Weekly 9, right? And then what you see happen here is it did push into the daily 20, right? And the buyers tried to hold it up. They failed. It comes down to the daily 50, fills gaps, and is reversing out of it, right? The fact that it gapped up, came down, filled the gap, and then still pushed back up to close higher than the EMAs, and it is avoiding the 9 and 20 cross, makes me think that it is still bullish. I also just have a personal opinion, and this is just, again, based off my personal opinion, that looking at the overall, at what is happening on the macro environment overall, we have a president who's very concerned with the stock market and very concerned with rates and things like that. We also have midterms. This is not something that he wants to see come down due to any geopolitical risk or any of that. Doesn't want to see it happen, because I think he's afraid that it would damage his chances in the midterms of having control of the House and Senate with the Republicans. Now, that's not saying I think it's right or wrong, or that I'm pro-Republican or pro-Democrat or any of that. I'm just saying, consider the administration that we are in. And you should strongly consider this, in my opinion, regardless of what your political affiliation is, because look what happened here, right? Look what happened last year, right? when we had this enormous move down, and then we had the tariff liberation day. Now is a good time to buy. That literal now is a good time to buy quote. SPY just below 500. SPY broke over 760. So yeah, now was an extremely good time to buy, because had you just bought into SPY when he said that, you'd be up 50% in 1 year. 50% on SPY in 1 year. It's pretty crazy. Absolutely crazy. So now it doesn't mean that I think this is going to go on forever or catapult up to 1,000. I'm just saying, looking at the overall macro environment, if that makes sense. We still have not recaptured 50% of the 6.5. Yeah, the bullish side we did stop at the daily 50. Yes, and we did have the 6.5 candle. I see what you're saying. The big Friday move down. Draw the fib. We did break over the 61.8, and yeah, we did break over the 61.8. So we had a golden zone pullback to the 61.8, and then if we look at, it would be, oh man, let me just invert this, reverse. We did hit both of those extension targets too as well. So the ones that I just covered in that fib lesson, we did hit both of those extension targets. Right, we hit that target, we went back inside the range, hit that target again, and rocketed off of it. Pretty cool. Pretty cool, huh? Now, if we were to just draw this fib a different way, and we look at here's the high and here's the swing low, we are also... Nope, this is backwards. I want the reverse off. Sorry. Here's the high, here's swing low. We're also... We pulled back into the golden zone of this massive move perfectly, just above the 61.8. Knifed all the way down. And because remember, on this day, we made the high and then made the low. Right? So we did pull back in here. You see we tried to do it again, and then they pushed back, they're pushing back out. So the key pivot to watch on SPY is definitely this 747, which, going back down to the 30-minute chart, is this peak right here, 747, right here. This peak right here, the Tuesday high. So one of the other concepts that I've talked about, I'm going to delete this for now. I'll leave the EMAs on because it's kind of helpful. One other concept that I've talked about many times that I want to just call out is the Monday range, right? So I'm going to have to go to NQ for this one. Or yeah, I'll go to NQ. I just want to hide all the drawings. Okay. That's easier. It was so much easier than Thinkorswim. Although Thinkorswim, I could just create a new drawing set, so that's cool. Monday's range. So Monday's range, always marking out the low and the high of Monday's range. Here was Monday's range. Peaked out of it, came down, back in, couldn't break that low, comes back to the other side, and look where we closed, basically at the high of Monday's range. Like, Monday's range is always what sets the tone for the week, except this is wrong, isn't it? That's Monday. What did I do? Friday? Sunday. Yes, Monday's range is down here. Yeah, there it is. That's better. See how Monday's range really defined everything. If we look at ES1, not ES12. Sorry. Oh my God, lots of drawings. I do really need to figure out how to do different drawing sets or something else. That'd be so much easier. Monday's range. The low of this candle, the high of this candle. Peaks above, nice below. I also wonder too if we were to fib that. Yeah, comes a little bit deeper than that. Yeah. On ES, it was a lot more mechanical. So this is what I was eyeballing, and it's like precisely right. If you look at the entirety of Monday's range, just say measured move wise, it made the measured move of Monday's range down to the low side. That's just what I watch with. I do it with gaps too. Is looking at the total of the range, and then plotting the same distance above and the same distance below. Yeah, Swepter, you caught that? Okay, I'm gonna have to cut this relatively short because I do have to get going. I just got a text message. So Monday's range being important. I always mark out Monday's range, watch Monday's range. I would encourage you guys to watch it too, because you can see how it set the tone. But looking at big picture, what I think we need to continue to watch is the daily levels, and looking at where we are within this daily range, right? This is quite the daily range here. And we need to definitely be mindful of it. ES though didn't close back above, and the 9 to 20 have barely crossed, so it's sitting there. Really, what happens from over this weekend is and what the Monday's range sets out to be is going to be important. FOMC being the biggest thing. With FOMC, it is of course expected that there will not be a rate change. So you do have the contract rollover. What are these things saying? It's news. Housing starts, permits, retail sales. Okay, FOMC. So it's just funny. It doesn't mark the rollover. Okay. So with VIX, what's going on with VIX? Let's zoom out to a bigger time frame, right? Oh my God, the monthly. So looking at the monthly, it's how most VIX candles look. Upper wick candles. Why are we always going to have upper wick candles on VIX? Well, because the market always goes up and VIX is an inverse, but then also because volatility spikes and then volatility cools, right? So there isn't usually not as you can look back and see, usually not a rapid cooling of volatility and then a sudden spike that holds and holds and holds and holds and holds. So we're going to have more upper wicks. That being said, because again, the market is designed to go up. If we look at, from what I've been watching, the inauguration, right? We've just basically been coming down to about this 14s level, barely cracking below 14, and then pushing back up. Now, even with going to like the weekly and then even on the daily, even with us spiking up over 20, the volatility has been extreme. I think this is something, and this is just a word to a wise, I think this is something that all of you should be prepared for if you're going to continue to trade NQ and then ES as it continues to increase. Why? Why do I think you should be prepared for this? Because as the number on the chart continues to increase, right, a 1% move is bigger now than it was 5 years ago. It is structurally bigger. It can still be a 1% move, a 0.5% move, a 0.25% move. So when you start looking at the overall market in minor fluctuations, like even a 0.1% fluctuation is different now than it used to be, right? That is one of those things that you have to evolve to and adjust as your trading goes on, right? Just like once upon a time, years ago, when I started trading NQ, I was often trading with a 6-point stop. That is suicidal now. It's not going to work. It's just simply not going to work. It might work a handful of times out of 100 and a bunch of micro paper cuts. It's just not worth it. And I'm not talking micro paper cuts because I'm trading micros. It would be the same micro small paper cuts of trading minis, only to watch the move potentially go 60, 80, 300 points in your favor. So the answer there is always sizing down, adjusting your stops to be based off of a technical place on the chart, and then trading accordingly with your targets as well, and not just sticking to, I always take 10 points as a base hit trade, because the market's given out 10 points like it's Skittles. And if you are still only taking 10 points and you are reviewing all of your trades from the previous weeks, you should then see that you've been leaving a lot on the table. If you're reviewing your trades and you're not seeing that, let's have a chat. So there's the VIX daily coming back down below these EMAs. So for VIX to be bullish, was hoping to see, or I guess was projecting to see kind of that was will hold. However, we've rejected this area above the 22s a couple different times. This area here in the 22.5 range is something that I would watch as a multi-day bearish resistance, because when I go down to the 30-minute chart and I look at this time frame, I hate that VIX doesn't highlight extended hours, by the way. You can see this was an issue Wednesday pre-market, Wednesday during the day, Wednesday at the end of the session, Thursday during the day, right? And then if you count this one and you just mark out like here would be the line chart pivot. If I just didn't want to make this like a huge zone, but if I adjusted it to the line chart pivot, you know, look again, you're seeing basically it barely closed higher on a line chart, which, see, barely closing higher than these 3 preceding wicks, only to flush. Okay. So 22.5 is a key area for supply. We are back down here at the scene of this, right? I called this big triangle out as VIX looks ready to pop. What happened? We got the Wyckoff spring. You could call it manipulation. You could call it, you know, the Judas swing, whatever the frig you want to call it. It's a Wyckoff thing. It's an old school thing. It doesn't matter. We had manipulation down and a rocketing move the other way. We rocketed above the highs. You know, we're basing off of pivots, holding higher lows until these higher lows failed. And ultimately, we couldn't hold higher lows anymore. And we started making the lower highs and pushing down. So now here we are. So when the market, if the market holds under 17.5 and then continues to cool off, then, you know, the market will have room to breathe and we will see some rise in the market. If we are just doing this sort of just like this, like I'm moving my cursor down, choppy, just like this, that's when you're going to see like those ugly melt up days that nobody likes to trade, because it's like you're afraid that every pullback is going to end up being a knife, you know. And in this market, it's a fair assessment. So watch your pivots, look for areas in multiple confluences to take your trades, and then just, you know, just be choosy, right? If then here is one thing that I want to go back. Whoa. Oh, it's because I drew this zone, isn't it? Let's go back to NQ for a moment. I cannot remember which day it was. I think it was this day right here. All right, I'm going to mark this level. The reason I'm mark this level is this was the RTH high. Oops, let's not use that one. Let's use this one. This was the RTH high from that day. Now, if we go down to the 2-minute chart. So I remember when, then this was another trader called this out in the group, and I appreciate that he asked this question. He asked, when we were up here, what are my thoughts on a previous day high long? Now, taking a long off previous day high. Now, I don't know how much the stop would be or whatever, but I said, I'm not a fan of this trade. I'm not a fan of this trade because you're too far from how I would define risk. And I consistently define risk as entries that are near here, and also you have the orb level. Now, we broke out over the previous day high, flushed back down, and pushed back out of it again. Like, if we're going to push back down, I was going to say, okay, it should hold. But I'm not going to just take a long entry here just based off of a singular level holding. And I'm looking at what is also important for the traders of that session, which is that orb high. Now, this orb high long trade is, yes, less probability and not A+, because we are still inside of the pre-market range. Pre-market high essentially is here. Following the London Open, yes, pre-market high is here from the London session traders, and the pre-market low is here. However, because we swept below, again, this is RTH yesterday or Thursday, we swept below the pre-market low. I was expecting a pre-market high break, which is what we got. Now, unfortunately, we got like random news and just BS in here, and it's not like you could just enter here and objectively hold through all that, because even if you entered post sweep, you know, this was 628 to, man, this is like 275 point pullback. Like it's just obscene. And the way it's just waterfalling down, it's like, you know, what are you holding? And then of course there's a news candle here, and then what happens? We go from 389 on the open to 551. So you get 260 points rocketing, no, 160 points, sorry, 160 points rocketing you the other way in 2 minutes. So if you didn't have a stop, say sayonara to your account. That's the end of that. Yeah, exactly. And then that would be a great call out too, Shiny, is that if people want to use maybe a percent of the ATR rather than points. And I think honestly, if you just adopt to trying to use points on the chart, it's going to be at least it will be consistent, because if we're in a tight range bound day and that day's particular ATR has shrunk down, then if that particular 8 days ATR has shrunk down, then it'll be easier to see because you're still using the chart, right? Hence why, the long I took here, the scales were, up here, right? I think I took one scale up here, which, was like 40 points, and then another one up here. And I obviously I wanted to get the high of day break on the last. I had 2 cons left, didn't get it, but that's okay. You move the stop up to break even, and that's the appropriate thing to do. I also want to call out really quickly a trade that, I don't have a name for this per se, and I'm still watching this, and how to best define it and look for it. But this 9 and 20 EMA trade flip. So key level is swept. And oftentimes it's hard when we have a key level that's swept, well, how do you get in? Because none of this is showing you strong bullish price action to get in. I like this one because it shows you, hey, we rejected out of the EMAs, we tried to push down, and then now we're turning green. If you entered in here at 314, you're just risking this candle's low, which is about 20 points. It's pretty safe. And that's like a very quick, I'm either going to be very right or I'm going to be very wrong, right? And then it pushes up. The other one here, though, is this failed breakdown. And I talk about this many, many times. The problem with this is that in this particular example is you're going into the 10 a.m. news, which is the University of Michigan Consumer Sentiment, and you are likely, or there's a potential that you get stopped or you get messed up by a wick. So you don't want to, just blindly enter into a trade here just because of that. Because you have news against you as a risk factor. But this trade setup here, where it pushes up above the EMAs, closes above, then closes back below, but still closes above the 9. Now you have, from a bullish perspective, they're trying to hold the 9 and they're trying to get the curl, right? They're trying to get this EMA curl and hold this thing up. You also have, right, just the way the candles are stacking on here. You made this lower low, right, higher low, and then now this is another higher low on the micro with the wick supporting. It's tough here, right? But just something that I've been watching and trying to be aware of for that reversal, because the key level has been swept. So more to come on that one. All right, I'm really sorry to cut this shorter than I had originally intended. I gotta go. I will schedule something. Oh yeah, Shiny, you're right too. The 160 points. Yeah, you'd get stopped. Who knows where you get stopped? Because this thing probably just rocketed, man. 1052. Can I go down to the seconds? I can. So on a 10-second chart, this went from 401 to 507. So in over 100 points in 10 seconds, you're going to get obliterated. You're going to get absolutely obliterated. So, all right, I'm going to stop it there. I appreciate you guys for tuning in, and I'll get the schedule out there for you all for a future session.